The US economy grew at an annual rate of 2.7% in the final 3 months of 2022, which is actually surprisingly lower than what analysts and traders were expecting. They were looking forward to a 2.9% annual growth. The slower increase in gross domestic product could be the outlying factors in how much those interest rate policies are affecting the overall economy. While we're still seeing strong jobs growth and we're still seeing growth in other sectors, it is getting a little worrying for traders when GDP's taken the hit first. The Fed definitely are wary about the economic conditions of the economy, as their most recent hike was their lowest over a past year. As they're starting to slow these interest rate hikes, are they making the right decisions, or should we still be on that aggressive path? Let's explore how the charts have reacted to this news. To start us off, the US dollar index had a great 0.16% climb on the announcement for the first 3 minutes of this news. You can see then we've flatlined around those tops and waited for the New York Stock Exchange to decide the movements of the day. Across our major pairs, we can see a very similar thing unfolding, with US dollar Japanese yen coming in at 0.25%, which is a little under 35 pip move, before that offering a fantastic fading opportunity for traders to bring that down and even further below where we started. The euro and the pound were pretty much symmetrical when this data was released, with the pound printing a 0.19% decrease in value and the euro printing a 0.18% decrease in value. Then finally, having a look in the S&P 500, we can see we printed a 0.25% decline in pre-market conditions as this prelim GDP was announced. And as we continued into the day, we had a very whipsawy day, heading to the downside with some negative earnings releases and managing to recoup all of those losses, closing at the prices we pretty much opened. Very volatile day leading into what could be a very profitable bullish day on Friday. Want to see more? Come join us live.